Welcome back to the Market Bias Tracker Weekly Crypto Roundup. This week, the board told a story that most crypto participants probably felt in real time. Pressure stayed broad, bounces were short-lived, and the names holding any kind of constructive structure were few. Out of 50 tracked assets, only 2 came in with a bullish bias reading. 39 landed bearish. 9 sat in neutral territory. That is not a board that is quietly building. That is a board under sustained, broad-based pressure. Let us walk through what the week actually looked like. The overall tone this week was clearly weighted to the downside. The average score across the full board came in just above 3, which sits well below the midpoint of a healthy market. Short bounces appeared in places, but they did not convert into anything that changed the broader picture. When the majority of a 50-asset board is reading bearish, individual pockets of strength need to be understood in that context. They are exceptions, not confirmation of a turn. The 2 names that stood out on the bullish side this week were TRX and ATOM. TRX carried the highest score on the board and held its bias clearly in bullish territory. Support is visible nearby, and the structure looks relatively intact compared to most of the board. ATOM also came in with a bullish bias and a score that separated it from the pack. Both names flagged trend friction on the shorter time frame, which is worth noting. That tag does not erase the bullish read, but it does suggest the path higher is not clean or frictionless. MKR appeared in the upper tier by score, but carried a neutral bias and a stack weakening caution, so it sits in a different category than TRX and ATOM. On the weak side, BCH and VET both scored near the bottom of the board, each carrying a bearish bias and scores that reflect consistent downside pressure. XLM also landed in the bearish column with a caution flag pointing to an ATR stretch condition on the 4-hour time frame. When a name is already bearish and showing a volatility stretch, that combination tends to mean the move has already extended rather than just beginning. These are not names showing signs of stabilization this week. They are names where the structure continues to deteriorate. For the majors, Bitcoin, Ethereum, and Solana all came in with bearish bias readings this week. Bitcoin sat just above nearby support with trend friction flagged on the 1-hour. Ethereum carried a similar read with trend friction on the 4-hour. Solana matched Bitcoin's score and also flagged 1-hour trend friction. None of the 3 majors offered a bullish confirmation this week. When BTC, ETH, and SOL are all reading bearish simultaneously, it is difficult for the broader board to build any kind of durable strength. That brings us to leadership quality, and the honest answer is that leadership this week was extremely narrow. 2 bullish names out of 50 is not broad participation. It is isolated pockets holding while the rest of the board leans the other way. Narrow leadership in a downward-leaning environment is a caution signal in itself. It means the few names holding up are doing so without meaningful confirmation from the rest of the market. The main caution from this week is the persistence of trend friction across multiple time frames and multiple assets. That tag appeared on BTC, ETH, SOL, TRX, ATOM, and BCH. When friction shows up that broadly, it suggests the market is not moving cleanly in either direction. Breakouts in this environment carry higher fake-out risk, and recoveries carry higher reversal risk. Heading into next week, the primary watch is whether TRX can maintain its leadership position while the rest of the board remains under pressure. The other key question is whether BCH begins to stabilize or continues to break down further. Trend friction remains the dominant caution tag to monitor. If that friction resolves to the upside in the majors, the board tone could shift. If it does not, broad pressure is likely to continue. That is your weekly crypto context from Market Bias Tracker. Find the full board at marketbiastracker.com. This is market context, not a signal.